Hey, gang, it's Adam Von Romer, author, speaker, seminar leader, and 34-year veteran of the commercial investment real estate world, founder of the Commercial Investment Real Estate Academy. And on tonight's program, working with the professionals, we've got Chris Perry the third, not to be confused with Chris Perry the first or the second, who's going to be talking about fuel. And fuel is a really cool modeling valuation software. And guys, I got to tell you something. I own my own copy of Argus, and I've checked out just about every tool known to man. I'm always looking for something that's going to help us get to business quicker, that's going to make us look like geniuses, and certainly is going to give you the ability to react, if you will, on a dime with some relevant information and some real accuracy. So I think you guys will enjoy this presentation. I think this is probably one of the best tools I've seen in a long, long time. And again, like we mentioned a little bit earlier, I know we've had a hurricane and a lot of people are having trouble with phones and internet. If you couldn't make it tonight, don't sweat it. We're going to do it again. Chris, are you ready?
I am ready to go.
All right. Well, let's start off with, tell us a little bit about yourself and your company, and then I'm going to click off here and turn over the screen duties to you. So if you want to pop your screen up and kind of narrate, away we go.
All right, give me a second here, and
yeah, no problem.
I'll answer your questions as well.
So inquiring minds want to know, who is Christopher W. Perry III?
Well, I appreciate the intro to the platform and to me, obviously. So my background is 10 years in technology on the development and product management side. I've also spent about 10 years in the commercial estate investment arena. So I'm very familiar with the equity and debt side of the business. Fuel itself, we've been building this platform under the radar for several years. It has several $1 million into the platform already. And we branded and launched it in May 1st of 2017 as Fuel. Our CEO, Glenn Murray, and a couple of our other founders are very well known in the commercial estate tech arena for having built platforms and selling them to Yardi and even Argus and a few others. So we're all very versed in commercial real estate, not only from understanding how investments are done from the ground level, but the technology around it as well.
So just out of curiosity, I mean, obviously, for some of us who've been around for a while, we've known and seen Argus before, and like I said, we've seen a couple of the other products. I mean, what makes you guys decide or think that there's got to be a better way? I mean, what prompted the whole fuel thought process? Was it just that?
Yeah, that's a really good question, Adam. For us, it's several things. I'll give you a couple of my personal favorites. What we're doing with Fuel is opening up commercial estate investments to the entire ecosystem. And what we mean by that is the ability to be able to share and collaborate and do your investments in the cloud. And what I mean by share and collaborate is, so if you don't have a license for Fuel, Adam, I can send you a model and you have full access to, do the analysis however you want. You can change your MLAs, add tenants, you can even create new properties. So the people that you're working with can provide access to anyone. For us, I think the big thing was really, look, I think the best analogy to give you is Blockbuster versus Netflix. At the end of the day, you're watching a movie with both of them. But the first time you ever use Netflix, you're probably like, wow, this is great. And the second, third, fourth time, you're like, okay, I can never go back to Blockbuster, right? Again, you're watching a movie, but they change the experience. That's the same thing Fuel has done with valuation. At the end of the day, we're creating a valuation, but the experience and what you can do is completely different.
I got to laugh because literally, and I think I shared this with you earlier, I went down, I'm actually working from the house, but we had dinner and the argument was, what are we going to watch tonight on our Netflix account? So it's literally like, Oh, really? Boy, that's particularly timely, and it's true. I mean, I don't think we've even bought a movie in 5 years.
That's
I
right.
don't think I could find a place to get a movie. But enough of that. Do me a favor. Let's kind of dive into fuel. Give us a walkthrough. Show us some of the cool stuff that fuel can do for us. And some of the things that you guys are particularly proud of. And then, like I said, I'll probably pepper you with a few questions, and I'm sure we're going to get a couple of our attendees as well.
Sure.
So
Yeah.
it's your stage, my friend. Have at it.
Awesome. Cool. Thank you again. All right. Thank you, Adam. So here what we're looking at is one of 3 fuel dashboards. And you can see it returns all of your information, whether it's your levered information, purchase and sale information here, even your cash flow information. This is also exportable from Excel, and you can obviously interact with it as you can all of our widgets. You can also drill down into respective areas by clicking on this ticker that follows you throughout the system. So it's also worth noting that this is real time. So whenever we make a change, you'll see it impact on your live ticker. So I just clicked over here on our tenancy tab, which shows you the occupancy and vacancy for this particular center, our Riverwalk asset. Again, everything's interactive. We can drill down into tenants. We can play around with the occupancy chart here. Even this widget right here allows for more insight. So I just clicked on the view all just to go back and show you what I did really quick. I just clicked on this guy right here, which takes you back into the rent roll, and I clicked on the activity tab. So now what I'm looking at here, outside of just pretty colors, is absorption for this time period. So from January 2017 to 2015, which pulls in my in-place information and my forecast lease information. It's also worth noting right here that this date is different from our purchase date, which, if you are familiar with any of the other tools available today, your dates are always dependent upon your purchase date.
Mm-hmm.
And fuel, they are independent of, which gives you a lot of flexibility to look at your data in a lot of different ways.
Gotcha.
So let's jump back over to our third and remaining dashboard, our cash flow widget. So again, another nice, pretty graph that allows you to export to Excel and PDF. And those visual aids that you just saw was me scrolling over each line item, and it just simply shows you the cash flow element that you have selected down here at the bottom. And you can turn those on just by simply clicking these buttons here.
So what we're actually seeing is the income, the expenses, and the net operating income depicted in almost a graphic and linear fashion.
That's right. And the nice thing about this, again, you can look at this whenever you want. If you wanted to see historical performance, assuming you had your historical information loaded up, you can. If you want to see way out into the future, you can as well. You're not limited by what we think is right, but you have the flexibility to do whatever you want in terms of the views.
Okay.
So I'm gonna come back and talk about revenue and expenses here in a moment,
Sure.
which is obviously where we do a lot of our data entry portion, if you will. But I want to touch on some of the more cooler aspects of fuel. Not that data entry isn't cool, but there's some other areas we can touch on first. So I just clicked on our debt section here, and you can see that I've layered in multiple pieces of debt, whether it's my mezz piece, my senior piece, even my refi piece here that's layered in, and all of them are customizable very quickly. You can see here there's no amortization. If I want to quickly come in and just say, okay, we want to amortize this. I'm actually even going to change this date here. Not that it really matters. Just say we're just going to have this home for 2 years, a little over 2 years, and at 1.5 million. Let's say we're going to amortize it, but we're going to have the first 12-month interest only, and let's say the amortization is actually going to be, let's just call it a 10-year. Fast AM there. Actually, let's do it longer. That's good. So when we save here, we'll see our metrics update. Again, it's real time, it's fast, it flows throughout the entire system. So just like that, we just changed our mezz piece here. We can even go into our purchase and sale and do similar things. So, let's say you're working with a client or someone on your team is trying to back into a specific value,
right?
Whether it's, whether you're using a 9 cap to value, you can see my metrics just updated here. Or
Right.
let's say I'm backing into, $300 a foot. Well, I can see what's going on with my return. That yields me an 8% cap rate and an 8.5% discount rate or present value. If you're an appraiser and you're trying to back into, a 9% present value, well, you have a 16 million present value amount based on a 9% discount rate.
Hey, Chris, go back to that debt a second, if you would, please.
Yeah, sure, absolutely.
So let me see if I get what you've got.
Do you want me to open up a specific?
No. Let me see if I understand what you've got in here. You've got
Sure.
mezzanine debt. Let's just call that at acquisition, right?
Yep.
You've got a senior loan, and then the debt for refinancing is set to take out both the mezz and the senior loan sometime in the future.
That's right.
Okay, so you've got it from when we bought it to when we retire the other debt, when it balloons or whatever, and then we've got the takeout money.
That's right.
Huh, interesting.
And initially these two were, sorry, go ahead, Adam.
No. I was going to say, is there like, for example, I know this is going to sound ridiculous, but is there a limit to the amount of, or let me say a limit to the number of different debt pieces you can have?
Absolutely not. You can layer in as many debt tranches as needed.
Interesting. Because I know we had a center that we looked at that had 8 separate mortgages on it, which was crazy.
Yeah, that is.
But they had them, and they gave them. Interesting.
Well, you can do that. You can do that here in fuel with a lot of ease.
Interesting. Well, that's really cool, though. You got the mezzanine, you got the senior debt, and then you've got the refi and takeout loan later on. So you can use a construction to perm if you're doing a project. You can have it reset at the permanent rate. Huh.
Absolutely.
Interesting.
Yeah, and we're building a lot of really cool things around the debt functionality. My background by trade, if you will, is debt production for 5 years or so at a very large institutional group. So there are a lot of nice little bells and whistles that we're going to add in here to help out our lender friends.
Interesting. Well, that's pretty cool. Let's take a quick look at because I know one of the things that used to make what few hairs I had remaining fall out was when I was putting in tenant information in Argus. I was like, really? Especially when you've got like a retail scenario, you might have an anchor tenant that's $12 a foot with percentage rent, and then you've got the non-anchor tenants at $26 a foot, but 3% annual increases. And, then you got another anchor that was, let's say, a drugstore with, a base rent and then a 5% increase every 5 years. Can you handle those different scenarios?
Yeah, and forgive me, Adam, I didn't pick up quite everything. So jump in if I misspeak here, but if you have a retail asset where you have what kind of scenarios again?
Well, in the first scenario, you have the anchor tenant who's paying $12 a foot, fixed, and then percentage rent. Then you got the inline guys that are paying $26 a foot with 3% annual increases, and then you have a drugstore at the other end that's $18 a foot, fixed for 5 years, but with a 5% increase every 5 years.
That's right. And to model that is very simple. So let's just open up the Chipotle lease here. So, outside of just being able to manually enter data into Fuel, we also have automated features. So we can connect to any proprietary database that you have, whether it's, Salesforce or SAP. We can also connect to Yardi, MRI, et cetera, which if you think about it, it really automates this whole aspect of pulling in your revenue or your income and leases and expenses, and it really takes the manual labor out of this. Another group that we're partnering with, or we're finishing our API integration with, I should say, is VTS, or formerly known as View to Space, which for our owners out there, it's huge because now they can not only do real-time valuations, but again, they take out the manual labor of loading up their rent roll into a model.
So it'll pretty much suck the rent roll right in.
That's exactly right.
Cool.
Now, if we want to stick to the old-fashioned way of doing things, well, we still have this quick input and detailed input. Okay, so I'm just going to double-click on Chipotle here, which will open up my quick input scenario. So you can see this is just a consolidated or a compact way to enter in your leasing information, from your tenant name all the way down to your market forecast. You can layer in different bump scenarios. There's a lot of flexibility on how you can layer in your ramp. And there's a lot of insight into your information as well. So even tells you when your forecast starts and even terms and things associated with that as well.
Got it.
So I'll go over to the detailed input and we'll just pull in Chipotle since we're already looking at that. So Chipotle here, so you can see the screen, the main difference is colors and all these numbers over here. This is just showing you your cash flows for the lease as you build it out. So let's look at it on a yearly per square foot basis. So what this really helps you do is not only double check your cash flow for the lease, even showing your net effective rent and your gross effective rent as well, but it helps you spot errors. Right. So, I use the fat finger stuff a lot and, $500 a foot. Well, that's obviously not right here. And the beauty about fuel is if you don't pick it up quickly, so let's just save this real quick. Even if you don't pick it up quickly, this is our tenant dashboard. We'll talk about this in a moment. If you don't save it quickly, notice my unlevered and levered IRs have changed. All right. So you can quickly find mistakes by not only the checks that we have in place, but also by the ticker that follows you throughout the system as well.
If $500 a foot might be a bit much.
I'm sorry, you were breaking up a bit there, Adam.
I say $500 a square foot might be a bit much.
Yeah, right. I mean, if you're able to land that deal and you already own the space, yeah, that's great. I mean, all right. So here we're back out at the main screen, and what I want to show you here is Kroger's lease, and that's only because I have some information loaded into it. So we're going to go into the tenant dashboard this time. And really the tenant dashboard is, it acts as a snapshot of the deal, but it also acts as a repository or like a mini war room. So you can upload your notes. You can upload any attachments. So, if I had lease information for Kroger or the lease abstracts or any other pertinent information for Kroger that I would want, my investor to see, or my broker, or, your prospects, if you are a broker working with, when you transfer this model over to them, all this information comes along with it. So you don't even have to worry about setting up a brand new war room. So this particular section, the encumbrance section, what we mean by that is your renewals, your termination, your co-tenancy clauses. You can layer all that stuff right into the system, right? Today it's kept loosely. It's either in Excel or Word or on some napkin, and you send it over to whomever you're working with in the format that it's on, right? Now you have a system to track.
Legal pad with a coffee ring on it.
That's right. I mean, that's basically how I used to do it. Don't tell anybody I used to work with that though. All right, so that's the tenant dashboard section. Why don't we jump over to let's jump over to the reports quick.
Sure. And
go through a couple of those real fast. Actually, you know what? Why don't we go into expenses, because that makes more sense instead of just skipping right over expenses. So I skipped over recovery rules. There's a lot of flexibility around recovery rules. And I shouldn't say I skipped it. I mean, you're going to load up your expenses and set up your recovery rules more than likely. So you can set up your expense groupings and things like that. So in fuel, you can set up a standard or percentage of value property tax. Property tax is a circular calculation based off of the purchase price.
Right.
Percentage of value, that's for variable expenses like your management fee. So we don't need to pop through all those, but just to show you a quick screen, here is the standard expense setup, which, again, think of CAM, insurance, things like that. So you have a lot of flexibility and a lot of ease on setting things up. So if this was really supposed to be $475 a foot, I just type in the number, hit tab there. You see it flows through. Here's my 3% growth. If, I needed a new growth rate, I can come over here, select one that I've already created, or I can create a new one, or I can edit it on the fly.
Hey, Chris, what about a scenario where you have, like, back to our retail scenario where, like, for example, one of the anchors doesn't pay any CAM at all. One of the anchors pays like a reduced CAM. And I had a situation where there was actually a pad charge where they paid directly for their portion of the parking lot, but nobody else did. Can you kind of like bifurcate those expenses and give everybody kind of a different allocation?
Yeah, like CAM pools. That's exactly. So that's a good segue over to let's go ahead and save those changes. That's a good segue over to the recovery rules. So I don't have your particular scenario set up, but I think you'll get the idea. So what you can do is set up different expense groups for your recovery. So if there was one specifically for parking, you can come in and set that up, whether it's net, increase over base, defined amount. Let's turn off show prior years here. You come in, enter in your values. You even have floors, caps, ceilings, all the bells and whistles that you need to model any kind of recovery structure.
Huh. And then we can assign those to different tenants.
Absolutely.
Yeah.
Yep. Back here in the, let's go back to the rent roll real quick. So here in Chipotle, you see I have base year set up here. And these on the left are the system defaults. And then I don't know if you picked up on when we were in the recovery rule section, we have these different scenarios here. These are all scenarios that I've created, which again, you can edit them on the fly. You can create new ones on the fly. You can change the allocations. But yeah, this is where you would come in and sign those different recovery rules.
Ah.
So that's, go ahead, Adam, sorry.
No, I was going to say that's interesting because those recovery rules are for that particular property. They're not a global recovery rule. It's a recovery rule for that iteration.
That's right.
Gotcha.
I think you were trying to tell me something there, but I couldn't hear you. So
no. I said I got it. I got it.
Cool. All right. Well, let's segue over to the reports section. We do a lot of different things with reports. So by default, Fuel has about 37 reports, but we also create custom reports as well. So for instance, our friends over at Colliers, if you've seen one of their offering memorandums lately, you know that this looks exactly like what they put out in their offering memorandum. And their analysts can simply come in here, hit export, pop it open here in Excel, and boom, it's ready to be dropped into an OM.
Huh. There it is.
So, I love showing that because it really hits home, again, the flexibility that Fuel has to take a lot of the manual labor out of the things that you're doing. Whether it's your proprietary reports,
Sure.
Whether it's the speed of entry or even the real-time valuation. It's all a big change of what we were used to as investment professionals.
Well, to me, it's just a lot cleaner and it looks a lot more user-friendly than what I had been using. And I think you and I talked about that. I went and put one on myself and played with it, just to see how it worked out. And 20 minutes, I was up in operation.
Yeah. So I'm gonna transition into one more report here. Actually, two more reports. So this is our standard cash flow from operations, which shows you your income, expenses, your cash flow from operations, through your NOI, all the way down to your levered cash flow as well. So this is a presentation report. It's ready to be handed to clients. There's no editing. You can edit if you want, obviously, but it's a ready to go format. One of the other reports that we have that's a very popular report is this cash flow report, which allows teams to export the cash flows and dump it into their proprietary models. So it doesn't look that way right now, but that's because this report is fully customizable. So I'll just click here and you can see that it drills all the way down to the tenant level if I want. And even when I export this to Excel, it will export the functionality with it as well. So in Excel, we know that as grouping, and you can see here, the grouping still works.
Huh, interesting.
So that's, that is a very high level overview of Fuel. There's obviously a lot more to the system, sensitivities, which we didn't really touch on. Real fast, I'll tell you, this allows you to control different scenarios. It's a pretty cool feature, and I'll show you a couple that I have baked in. Here's one called Market Goes Way Up. Well, let's see what happens here. This is a model that you can see. Well, it doesn't go way up, so I probably don't have my settings changed too much, but you can see it did impact my unlevered and levered IRRs. Here's another one that I've created called Long Release Up, which probably should lower everything because there's a long release up period. But all this is, you can create all this on the fly if you just wanted to create, market drops. Actually, let's do another one. Call this the unicorn scenario.
Unicorn. I like it.
Yeah, so this is if everything aligns just right. Let's go back into our market assumptions. Let us change. Let's see what this is tied to. $48 grocery. So let's actually change this value to, 75 bucks a foot, and we'll keep it at 5% growth. Actually, let's change our growth. It's just telling me that it's tied to that rent. Let's change our growth to 10%. And when I hit save here, you can see my values have changed by the green highlighting. And when I hit save here, there we go. There's the unicorn scenario. So we were quickly able to model a different scenario in seconds, whereas again, today's tools take you, hours in some cases.
We'd still be sitting there looking at the thing saying running iteration, running report 1, running report 2, running report 3. Running report 47.
That's right.
Interesting. Well, let's take a quick look at the different reports again, and I thought you showed me a couple of different almost operating statements the last time we spoke. And
sorry, you broke up right. You broke up right after. Let's look at the new reports.
Yeah. We were talking about like the rent roll and talking about a couple of the different cash flow, operating statements.
Yeah. Well, actually, let's look at the sensitivity comparison cash flow report real quick, since we just ran sensitivity. And this particular report, what it just did, compiled all of my scenarios here, and it pulls in my selected cash flow elements. What I mean by selected is up here in the options, I have the ability to select other cash flow elements. But this is a nice report because, again, you can run this against, your own proprietary models. You can do different analyses on this as well. Then like your standard rent roll report, here's your standard rent roll report showing your executed information through your vacant information, and a detailed one, which I almost don't even want to show you this one because we're revamping it, but I'm just show you since it's so everyone knows that it's there. But the look and feel of this is actually going to change a little bit. But this just shows you, your suite floor occupancy, and you read it row by row over here. And then you can see the information that's tied to each tenant. So here's Chipotle. I'll scroll down a little bit. Here's Kroger and Kroger's information and their leasing information. You get the point.
Interesting. Well, that basically gives you almost like an abstract right there.
It looks like what?
An abstract. What start date, end date, increases. I mean, it's everything.
I'm gonna disagree with you because I didn't hear the full statement, but that just know I trust you, Adam, if I'm just agreeing with you blindly like that.
No, I said it's almost a complete abstract of the lease.
Yeah, it's almost like an abstract of the lease, and that's another feature that we're rolling in that I might as well go ahead and say on this call. So
nice. Yeah, that's a lot of really cool stuff in one spot, though.
All right, man. What else should we try and touch on?
You know what? I think we got pretty much all of it for the time being. So I think that we can kind of wrap this up. Let's compare and contrast what our videos and audios look like, and see who got the better product.
Sounds good.
All right,
buddy. All right, thanks, Adam. I'll talk to you soon.
Yeah, we'll talk a little bit later on.
All right, thanks, man.
Thanks, Chris. Bye.